Hello, 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 everyone. Happy Friday. How's everybody doing? Sorry I'm a bit late today. Again, the Jim Ariel Futures Edge podcast ran a bit over. Make sure you stay tuned for when that drops. You can hear my thoughts on the market, and you can hear Bob and Jim discuss some macro things and the unemployment numbers again today. Let's see who's here. Good afternoon. Apple stocks keep rising just like a weather balloon. Could somebody tell me why that has not been shot down yet? It's over friggin' Montana. It's not like it blew off course, really. You can't, and Montana does not have a lot of things in it. Can't you shoot it down? Even haul it off course and then shoot it down, take it out of the sky? Can somebody explain that to me? Everything's insane. Everything's insane. George says that's far enough, said the bear. Well, we do have potential bear minor pullback patterns, not major yet. Crude is tanking. That is a good pun. Crude did stop out the double bottom pattern. So that is, I liked your pun. It was very punny. AP's World, good afternoon. Anissa, good evening. Staying up later, thank you for that. Good evening, Jacob. Hello, Mike. Beautiful day down here in Bobtown. Sunny 78. Thank you for rubbing it in. It was minus 20 with the wind chill this morning. We're up to a high of 10 right now. But it's supposed to warm up next week. Hey, Dave. Hey, Daniel. Again, thank you, everyone, for spending some time this Friday afternoon with me. Let's just do a quick recap. What we have S&P, the services and composite PMI still in contraction. Then we had ISM blowing it out of the water, expecting a slight expansion, and that was just off the charts. Strong number. Employment number back at 50. New orders from contraction to major expansion mode, and business activity hitting it off the chart too. Non-manufacturing prices, a little down from previous, but climbing from the forecasts again. So is inflation going to make a little comeback move? Doesn't this make Powell look like a raving lunatic with everything, though, in my mind? I talked about that a bit on the podcast. So that's where we stand. Market map. Apple, just insane price action today. Google even rallied before the little rollover into the close. Google was pretty nuts, but Apple it was like Apple's valuation is getting back up there too, pretty high. But that was just like price action. I was watching going, what? There's like a panic to buy Apple. Plus, remember, buyback programs have kicked in again. Companies after earnings can start their buyback programs again. So you have that sort of underlying bid for a number of companies that have buyback programs. Especially on periods of dropping, buyback programs can produce an underlying bid. Everything red today. Energy held up the best. Consumer cyclical, pretty big turnaround. Followed by communication services, but communication services still up strong with technology over a whole week's performance. Fed watch, interesting enough, pretty much with today's data, 100% baked in for a hike at the March meeting with a little room for a 50, and I think they should shock the market, but they won't. And May, now baking in not baking in, but probabilities of almost 61% for another 25 hike. And then if you assume that those are correct, that would take it to 525. Then you have one rate cut in November down to 475 to 5, and one more in December. So that's what's showing up now on the Fed Watch tool. So let's pay attention to that over the next few weeks and see how that shifts. Fear and greed, still in extreme greed now. Remember, up here, we can get at least a short-term top. So do we have anything that shows the top? Well, there's Apple, by the way. Just look at this. Look at this. I mean, this was the panic of all panic buying today. Like was this your last opportunity to get an Apple after they missed earnings? What a This is insane. We're back to that. Did you also see the numbers? Like 28%. I think it was 28% of all volume in January was retail driven, which is a new high. Retail is in some ways driving this stuff. So till it rolls over, it's trade with the pattern. Now I'm expecting a little pullback. Let's get to the S&P. Let's get to the S&P. We do have a little double top pattern. You can see it better here on the 4-hour. Little potential pattern right at the bottom of the 4-hour rotation zone. Is that like to new lows, or we take out in October's lows? No. Where does that take us potentially for running into next week? Remember, it is slightly lower probability because it's against the daily rotation zone. And why do the probabilities drop? Because at any point, and this is tested out with just the probability numbers, it can catch without getting to all the targets. But that would just, if it went to all the targets, it would just take us not even back to secondary key support. The first target is just behind the primary rotation zone. So, could this lead to something bigger? Yes. But we have a lot of price action to get through, and we could get caught in a range down here. This doesn't mean we pull back and go to new highs, although I will be watching for a reversal pattern. Why? After this pullback. So, I talk about secondary reactions, right? You've heard me talk about secondary reactions. We had, on the shorter term basis, we had the run up after Powell. We had the pullback. This was a secondary reaction on the short term. So, why do I like watching secondary reactions? Because it's set up now a short-term pullback pattern. Then I will go up in time frame after this short-term pullback pattern to watch for the next potential buy signal. That buy signal does not mean it has to go to new highs, although if you put up the key harmonics levels, which are now off here because I took some stuff down for the podcast, we could still easily retap probability-wise at 87.5 and even go above, even come up back in this area around the high area from August before making another topping pattern. But we have a little minor topping pattern. The rally after that, because it would be take some black swan event to make a V-shaped top, especially through all this price action. There's no clear path. There's trade. I mean, this price action, you look at the range that was just broken out of. This was essentially November, December. So you have this upper range. You have this lower range from October and January. You have a lot of pullback to do before it can really tip to bearish mode. You can also pull back here, rally up a bit, roll over, and consolidate in this area. But that's why the secondary reaction will tell us something. Okay? And even shorter term, let's say we get a one-day pause bar and starting on Sunday night, Monday, it just ramps up and takes out this high from today. It could just be a one-day pause bar, and we could hit some of this higher area before we know it, and then make another topping pattern potentially before a rollover move. Keep in mind, I'll get to comments in a second, weekly cycles are at the top, but we don't have a confirmed rollover just yet. And daily cycles are back at the top after that little fake out move. So I am keeping an eye, but even with cycles at the top, we will get some kind of bounce play. It might take 2, 3, 4 days, whatever. And then we'll see. We'll assess things. Where do we sit? Let me get back here. You did call it, right, make a visit bears before to run back up. So yeah, we're gonna come back down with. I'm watching 70 to 71.50 in crude. Next will be an opportunity to buy the dip. There will be probably a buy setup after this pullback. And then we're going to see. That's what I mean by secondary reaction. That's why it's so, if you want to study, and I hopefully this won't get cut out of the podcast, but I said on the podcast, if you want to study something and get really good at trying to gauge reversal patterns, don't worry about the primary top or primary bottom. Learn to analyze and read the secondary reaction. That's going to get you, don't have to sell the high and buy the low. Okay? But learning to read a secondary reaction can really be a key to getting in closer to tops and bottoms. All right, I don't need to sell here because this might not be the top. Actually, probability wise, it should still eke out a little more to the upside. Could it be a top? Yes. We won't know until hindsight. But the secondary reactions are very, very key. Like in the bottom from October, you didn't have to buy here. Remember, we had the inverse head and shoulders. There were other percent B buys. There was a lot of stuff that happened in here. There was even pullbacks here that triggered buy patterns. You can learn to get on moves, and you don't have to have bought here because the odds of you buying here, unless there's some capitulation bottoms, which are pretty much the best buy signals, and tops are a lot harder to call than bottoms in stocks and stock indices because you generally have rollover moves. You don't have V reversal moves. So that's just a little advice to learn to study stuff. NASDAQ, you also have topping pattern. That would only take it back into the daily rotation zone and back to this last most recent breakout from a couple days ago. That was established on the 30th of January to its highs and taken out on JPOW Wednesday. That would only take you back to those levels or a bit below. Even you have this rising trend line. Takes you back into the daily rotation zone. Then I'm going to watch for if one sets up a secondary reaction play. So that's what we have to go on. You can see that right here. Here's that double top pattern. Let's see. Yeah, that's a startling number about the huge amount of retail participation. Retail's just going nuts with this market. Hey, Jacob, if I were playing a shorter time frame doubles like 5-minute, 15-minute, can I assume I have shorter probabilities? I'm against 1 hour rotation zone? Yes. And remember, probabilities on shorter time frames drop. Like a double that's triggered on a daily is a lot higher probability than a double that's triggered on a 5-minute. Now, a 5-minute double still is well above 50% on a closing basis only. Okay? But they're still tradable, but watch the rotation zones on the higher time frames. If you have time, can you show us S&P levels when the 210 went back to 0? As we come up to leaving inverted, I'd have to figure out how to plot that over the 210s. I mean, we're not nowhere going close to zero. I don't think I have the data back here long enough on here. I don't think I have it on this platform. But with today's price action, look at this. With your 210s, we're heading back down to retest the low area. We're nowhere near going back to zero. And yes, this still is a potential double bottom. You have the 10 3 months. That's the only thing that's got a little steepening on it. But also watch for that double top in 10 years, which would be the double bottom in 10-year yields. Where's my, what happened to my here? What happened to my, no, that's the 10-7s. Where's my 10-year yield? Here, we got a double bottom pattern in the 10-year yield, so we could see the yields climb. Oh, back to that real quick. I don't think I have enough data on this platform to do it. I'd have to find a longer term platform. Let's see how far this goes back. You have some in here. So you can just look. So you get the climb. We had negative. We do have enough. So we have some here. I'll give you an example though here. You had the you had the double bottom coming in around this close to minus 50, minus 45 basis points double bottom. Then the steepening going into 01, rapid steepening. You can just look at a chart. Go back as this goes into the rapid steepening in 01. Start looking at some of your indices charts. You have this reversal. You start getting the rapid steepening. What happened in 08? So here you go. And you see another double bottom pattern, rapid steepening. So here's two instances you can look up. This was the pandemic stuff right there. Before that, okay. 89, there was no double here, but you started to get the rapid steepening and we hit that recession in 91. So do we have a rapid steepening yet? No, not on the longer term chart. And we don't even have a double bottom on a weekly chart. We just have it on the daily chart. So that's what I'm talking about. Really pay attention to when you get the rapid steepening. And that's the rapid steepening above zero. A warning sign will be when it starts going towards zero. But watch when it starts accelerating above zero. That's when it can get more deadly for the markets. So I think all those time frames, if you just go look at your S&P chart, Dow chart, NASDAQ chart, you can roughly correlate it with those rapid steepening time frames. Chargers LT21. Thank you for being here. Those secondary reactions with oscillator divergences are clutch. Yeah, especially when you get the bearish or bullish divergences. Yes, that's one way you can help learn to spot them. Thank you for pointing that out. Bear better than beer. Burry said sell and delete his account. And again, we have done nothing for long-term models to not saying we're going to have another rollover play. This is tactical trading. If you're not, it's like I said, for a year or more investments, there's nothing I'd slam my money into just blindly. We've talked about that. For short-term tactical trading, you got to go with the setups and the patterns until it rolls over again. This reminds me. Well, there is still some irrational exuberance. I mean, that's what I thought today with that Apple stuff. Apple first double miss by Apple since 16, and it was like, let's just buy it like it's no tomorrow. Like there won't be a better price to potentially even buy Apple, and Apple's already in decently high valuation territory again for Apple. Not saying it can't keep growing, but also if you look at the, we'll probably have Bob on next week to talk about this. There were some fact set numbers that came out so far with the earnings season. This is not a strong earnings season, yet the market's acting like this is, another thing I said on the podcast, not trying to ruin it because I don't know what gets put in and what gets cut out. If we had been down to 3,000 and got this kind of buying action, or 3,200, or even, somewhere down there where we had more sane valuations and we were getting this kind of buying action, fine. Yep, we could be getting, hey, that would make perfect sense. Maybe the worst is over, but you have people paying up above significant long-term valuations. Like everything is priced, even with a soft landing, you don't have, these would be astronomical evaluations. Yes, they've come off their really stupid valuations from last year, but they're not bargain basement, especially with earnings still pulling in. A sterling, I took a long position on the 2-year yield at the close with the daily triggered double bottom. We'll add position on a pullback. There you go. Sterling watching the 2-year double bottom. You're welcome, Daniel. I think I covered your 210 right in that little thing. Hey, Dr. Michael. Well, let's take a look at the tick. Hey, Connor. We'll take a look at the tick. That's the point of doing these. I'd rather take Friday off. Okay, but sometimes it's helpful to review things while everything's fresh in people's mind. You see the tick, it never got it climbing. You can see it climbing. This is where I really like to focus on the candle bodies. It helps see the noise through the wicks. So like this, see how you can roughly see it? And then it shifted back down at the end of the day. But did it get really substantially bullish? No. And you didn't have a lot of broad-based buying. If we look here, it was buying in certain key stocks. See, you have to take, these are still red, but they did bounce back. Okay, but there was key stocks that there was buying, but there wasn't broad market buying. Look at all the red. So no, the tick, oops, what'd I hit? Yeah. There we go. The tick never got substantially really bullish. It climbed a bit, but nothing to the fact that, it was actually more bullish than I thought, though, today. I mean, I was shocked with some of the stuff. Like even Google did the full gap fill. Told you, I was watching to yesterday's open, and then let's review a little thing with the gap harmonics, which I haven't done in a while. So I was still focusing on the open price, but what happens? You got the close above the 62.5, and then you got the gap fill, and then you got the reversal pattern in the afternoon. Break below this 106.25, back down. But that was the only thing that gave me the hint, a little reaction at the breakdown level, and then for the full gap fill. And then some people came to their senses. But does this mean Google's going all the way back down, or can we get the secondary pullback and a reaction and still complete this triggered double bottom play? Sure could, closing right back at the 200. I mean, on the weaker side, you got Amazon coming up to close to prior day's lows before rolling over. So this is one that I would not be chasing higher at that point. Nvidia, though, yeah, you know what? So far from oversold and divergence, this again, divergence watching for a pullback, but we still have a bullish pattern. Could this still, yes, this can still run definitely higher. We have a triggered bullish pattern. But so far, I mean, yeah, a run up, but still inside day to Thursday on Nvidia. So far, so sideways correction. AMD, after triggering its double bottom, stalling out twice at that first target area and inside day. Still watching for a potential pullback, but you know what? This it's technically a sloppy double. This is why you don't want to mix up your time frames, because that does not do anything to destroy the bigger pattern. Look at that. Let's put this into context. If it pulls back, it's not even a pullback to the to the daily rotation zone. Another thing, one thing that jumped out at me big time. Let me just go over something first. Crude, which did take the double, and this channel pattern rolling over. So I'm now focused 87 to 100 area to see for support in there. Other than that, nothing going on crude in the short term. Here was that double top in the notes themselves, double bottom in the yield with the double top in the notes, and that would just potentially take us back to the lows from the end of December. And I think take us back to about a 3.8 something interest rate on the 10-year. Very interesting, something you should keep watching for next week. Look at this. Could not get to that one target. Substantial reversal, finally with divergences coming up here, and this is a shake and bake now. So I am watching for follow through back into the weekly rotation zone. I put out my targets on a longer term basis there. Shorter term basis, I'm watching 103 to about 103 and a half, just based off the daily. So keep an eye, because if this keeps running, you're going to see some moves on key pullback moves. Gold. Remember, trailing mode, breakdown, 1922 I talked about, just boom. Watching for a continued pullback in gold, especially if the dollar keeps running. Silver, watching for a continued pullback in silver. Watching for a pullback in copper. I had to put back up that double for the podcast. So that's where we sit with all. By the way, the Russell also has a mini, very sloppy double top, but where could that take us back to? That just takes us back to the top of the rotation zone. To not even to the open on Wednesday. What did I miss here? I don't trade on Fridays. Trading historically on Fridays is my worst. It didn't say I don't trade. It's historically, especially for shorter term stuff, the worst day. So, unless there's very strong patterns, I would rather sit on my hands or manage longer term positions. I especially don't over trade on Fridays. Those are for my own stats. Did Bitcoin form a double bottom on the 1 hour? That's really ugly, but no. Yeah, you can somewhat trade it. I wouldn't bother. I just target this 24,000 on a breakout play. Wouldn't bother with that. Yeah, when is the Trade and Cook live stream? Boy, if I tried to trade and cook, either the meal would be ruined or I'd probably lose a lot of money trading. So it'd be either a very expensive, well-prepared meal, or because I'd be focused on the meal and not the markets, so I'd probably lose a lot of money in the markets, so that meal would go way up in cost. Or I probably might do okay, maybe, but it wouldn't be stellar because my attention would be elsewhere, but I'd completely ruin the meal. So I'd be making something, if it was trade and cook for me, it would be like Market Mondays and mac and cheese. Hey, look, I'm making mac and cheese. I'm making the Velveeta kind, where I just have to boil the noodles and dump the cheese sauce on top. Because hopefully I won't screw that up as I'm trading. That would be my cook and trade, or trade and cook. CHTR. I would not be doing a nice tenderloin. I would not be cooking a nice tenderloin. So, yep, CHTR did trigger on the weekly. So that one completely valid. Come on. What's going on? CHRW. Yeah. That one would have had to have been entered on a daily and hit the stop reduction. If you could not have waited for a weekly on that, it was valid on a daily and would have had to have been entered on Wednesday or on the gap open on Thursday, and did hit stop reduction. Two completely valid patterns. Charles isn't a fan of trading on Friday, U.S. session. No, historically, I don't trade well. It's not that you don't get as reliable. I've found you don't get as reliable patterns on Friday on the shorter terms because you get other profit taking. You get wild swings. A lot of times you get option expiration, monthly. I'm talking the monthly options on a Friday. You get non-farm payrolls on a Friday. You get a lot of data releases. You got to get a lot of whipsaw moves going into the weekends. So my trading results, historically, that's why it's handy to track your trading results for shorter term trading. I'm not talking about long term or swing positions. I'm talking about if I was going to aggressively day trade on Friday, the results are worse than Monday, Tuesday, Wednesday, and Thursday. So I don't sit and focus on a 5-minute chart on Friday unless there's something that's really stellar. So there we go. So, all right, Sterling did 3 trades. One decent winner, and he kept his losses small, so about a 2% gain today. and you put on a little bigger trade. So you know what? It's just now. I'm not saying other people. You that's why you track your own stats. Somebody could be a great trader on Friday. But I'm going to tell you, there's going to be, if you track, especially for short-term trading, if you track your trading stats on and you just separate, because on day of week, do your analysis. You're going to have one worse than the other day of period, day of week. They all can't be the same. They're all not going to be the same. Now, it could be very minor and just a short-term statistical anomaly, or it could be more significant. I found Friday afternoons are absolutely atrocious. Unless there's a strong trend day and something to enter just on Friday morning and just ride it all day, which is a very different thing. But Friday afternoons are notoriously horrible for me. So take that information into account and you don't force trades. Do you have any advice on any data to collect to develop high probability trading strategies? Data to collect? I mean, just what I did is collected just the trading data, and then had some really good programmers do a lot of work on it. And I had stuff already from what I developed, even separate from programming it, with work I'd done on things like harmonics, and then I just rolled it into the testing algorithms. So it's just gathering data, and I'd focus on longer term data first rather than shorter term data. And when I say longer term data, 4-hour daily, weekly data first. Mike made an omelet and 2 sandwiches and did well. Well, I'm glad. I didn't say I don't eat. I just said I could not do a cooking and trading live stream at the same time. And if somebody can, I don't know, what audience would you attract? Hey, everybody, we're going to jump into the US dollar Japanese yen. Hold on, wait. I'm doing the reverse sear on my tenderloin. Gotta go flip it. Whoa, I missed a trade. I was flipping my tenderloin on the reverse sear. And I ruined those bacon wrapped scallops. But I did get that double bottom in the Russell. I mean, what kind of show would that be? Oh, boy. Get traders who want to open a bottle of wine early, and I would not suggest that's conducive to trading. There are days I have wanted to open a bottle of wine early, but I do not think I've ever done that during a trading day where I was going to continue trading. I actually don't like to drink early for some reason. All right. I can still not believe how well Intel held up after earnings. It's almost confirmed the weekly double bottom. Excuse me. Yeah, it's almost confirmed it. But not yet. Only hit that first target and then we shall see. All right. I'm going to leave it at that. I've been talking since the live stream at 2:30. Now it's going on for the Futures Edge stuff. Now it's going on 4:30. So I'm getting a little talked out. I will be back Sunday afternoon to review stuff then after I read through and analyze some more data. Before that, you are welcome, Anissa. So we'll be back on Sunday to figure out what's going on Sunday night besides that little potential topping patterns. And with that, everybody have a fantastic weekend. Shut down your computers for a time, step away, and I'll be back Sunday for more live streaming without food. Bye for now.